Welcome to Investors Insights. Our topic today is distractions. I'm joined by my distinguished colleague Adam Van Zant, and we want to provide you information that you will find very beneficial. And I also want to encourage you that after this vlog to continue following us on the social media outlets, LinkedIn, Twitter, Facebook, as well as our podcast, because the dialogue you hear today is going to continue on throughout the week using technology and digital communications to interact with you. Let's talk about the distractions. I'm going to first pull up this chart and just talk about the topics that we're hearing about. First of all, people are concerned about inflation. They're still very concerned about COVID, even though the vaccinations have taken place. They're concerned about the volatility in the stock market. They're also concerned about housing boom or bust. Is it a housing bubble? How long can this market continue to move up? How long can corporate earnings continue to go? What about the supply chain that's out there? Products aren't getting delivered like normal. And so are we going to see a trucker shortage that so many people have heard about? A lot of distractions going on, and actually there are a lot of positive things going on. Now, let me say this. When I say the year 2007, I ask people all the time, what do you remember about 2007? And the response is, well, that was the beginning of the financial meltdown. And you know what? They're right. But also, that was the same year that the iPhone was introduced to us. And the question becomes, which had a bigger impact? The financial crisis of 2007, 2008, or the iPhone that has now changed our lives and the technology that came with it? In 2020, the topic, when we mention that year, will probably always be COVID, coronavirus, the tragedy and what took place in the economy. But also, we've talked about in our vlogs that we've had a compression of 10 years in 1 year of technology and digital evolution. Adam, talk to us for just a minute here as we're tracking from a technical analysis standpoint of the strength of this market and the volatility that we are seeing. But also we see some boundaries here in terms of support levels, as well as we could possibly go higher despite the volatility.
I appreciate that, Greg, and you said it well. So let's start with technicals. The S&P Friday close came in at 4,156. That pushes our new resistance level up to 4,180 with a new support level of 4,130. Last week, we gave a year-to-date moving day average. This week, I want to pull it back a little bit and give more of a short-term indicator. So our 50-day moving average is hovering around 4,100. To be exact, 4,090. So when we talked about that floor or that ceiling for the markets, this is one thing that's starting to stabilize a little bit. We're seeing a little bit more consistency despite the volatility that we've seen the last couple of weeks and during the month of May.
You know, in seeing that volatility, every market has to let a little steam out at some point in time. And so we've seen the market trade back. There's a battle between bulls and bears going on right now as to the future of this economy, but we're seeing a lot of positives. You brought up a great point from a global standpoint in our meeting this morning about yields from an international standpoint. Here in the United States, we're debating inflation. We're talking about when will rates go up. People are concerned about mortgage rates going up. But you also brought out the fact about what's happening in Europe, that the confidence level as people get vaccinated, as COVID, we're trying to get it under control. We're starting to see interest rates go up. You want to show that chart right quick and talk about it?
Yeah, absolutely. So you'll see this chart real quick. And to your point, Greg, we get so focused on the U.S. 10-year Treasury yield, which is now hovering around 1.6%. It did actually go down on Friday, but since May 7th, it's held above that 1.6% mark. So we're starting to see credit strengthen a little bit, and we are also seeing that on an international level. Back to your point, the German and Swiss, we've been talking about this a long time, but it looks like we could see this start to rise back into positive territory.
Yeah, in other words, people don't understand that in Germany and in Europe, they've had negative interest rates, and we may very well see them start to turn positive. That's a great indicator. It also starts going back towards saving money. If rates go up, people are able to save money. We are also to get paid interest on that money. And also we're seeing yields go up on the dividend side because corporations are raising their dividend yields because they're having good earnings results. And so those are positives in this time period when people are starting to get anxious about the economy showing such strength. So Adam, talk even more about this chart regarding small caps.
Yeah, Greg, and you touch on inflation being a big topic right now. We've heard that a lot. Small caps has outperformed inflation every decade dating back to the 1930s. So while inflation is a big topic right now, historically, we have seen markets keep up with it.
And then the other thing that we just want to talk about here is that what are some of the other themes that we think we're going to see coming out of 2020 into 2021 and moving forward. Just look at this chart here. You're going to be seeing more and more conversation about the rise of electric vehicles. Keep your eyes on that. 5G connectivity is going to be very important. Digital streaming media is another category that we're watching closely. E-commerce will continue to boom and grow and evolve. Also, ESG is three letters you're going to hear a lot about, which stands for environmental, social, and governance within companies. What's their strategies on these three categories? And then the digital transformation is alive and well. We think innovation is going to continue to change things, and there will be those industries that will go through big transformations, and some will actually fade away. Others, though, will continue to succeed. And here at Five Plan Partners, just as we've embraced high-tech, high-touch, we, from the standpoint, believe that those companies that allow people to use technology to communicate with, as well as keeping the human factor and that contact together, working together, that those are the companies that will benefit others. You can talk about the volatility in the market, but there's a lot of positive things taking place as we come out of COVID and this economy that's been held back, and now people are starting to get back to normal, to do business, to enjoy their lives, and keep an eye on travel. And we hope as Memorial Day weekend approaches that you've got travel plans as well. Have a great week, and we'll keep you informed.